Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this December 9th, 2025. It's been a day of mixed signals with plenty to unpack, from Federal Reserve anticipation to some standout moves in tech and beyond. Let's dive right into the key highlights for long-term investors like us, while also touching on short-term trends to keep our strategies sharp. First up, let's talk about the major indexes and how they're setting the tone. The Dow Jones took a slight hit today, dipping about 0.38%, reflecting some caution ahead of the Fed's upcoming rate decision. Meanwhile, the Nasdaq edged up by 0.13%, showing resilience thanks to tech strength. The S&P 500 hovered near flat with a tiny 0.09% dip, and the Russell 2000, representing small caps, nudged up 0.21% to hit fresh record highs. Markets seem to be in a holding pattern, with investors bracing for the Fed's next move. More on that in a bit. Now let's zoom in on some big movers among large-cap stocks. On the winning side, AppLovin surged over 5%, riding a wave of tech optimism, while Unilever jumped an impressive 15.7%, likely boosted by consumer defensive strength. KKR and Apollo Global also caught attention with gains around 4 to 5%, as private equity stocks rallied ahead of expected Fed rate cuts. Newmont Corporation wasn't far behind, climbing nearly 6%, as precious metals like gold and silver saw renewed interest. On the flip side, some heavyweights took a beating. AutoZone plummeted over 7% after missing Q1 earnings expectations, dragging down sentiment in the auto retail space. JPMorgan Chase slid nearly 5%, reflecting broader financial sector jitters ahead of the Fed's decision. Uber and Verizon also saw declines around 3 to 4%, signaling some profit-taking or sector-specific pressures. These drops remind us to keep an eye on individual company fundamentals, even in a broader market uptrend. Looking at the market movers shaking things up with high activity, Nvidia remains a focal point despite a slight dip of 0.34%. Still a heavyweight with massive trading volume as Trump's approval for H200 chip sales to China stirs debate. Apple and Tesla also saw significant action, with Tesla gaining over 1%, while Apple edged down slightly. These names continue to drive market narratives, especially as tech remains a key long-term growth engine for us investors. Shifting gears to the broader economic landscape, the buzz is all about the Federal Reserve's upcoming meeting. Markets are nearly fully pricing in a rate cut for Wednesday, with expectations of a 25 basis point reduction. However, there's tension around whether the Fed will signal a pause or further easing in 2026. Experts are split. Some warn of a hawkish tone that could dampen the Santa Claus rally, while others see room for more cuts if labor market weakness persists. For us long-term folks, this underscores the importance of staying diversified. Short-term rate moves can rattle markets, but our focus remains on enduring value. Diving deeper into market sentiment, the S&P 500's outlook for 2026 is a hot topic. Analysts are optimistic, citing AI-driven earnings growth and tech momentum with targets as high as 7,600, implying double-digit upside. Yet some caution a potential 15% pullback due to stretched valuations. As long-term investors, this duality reminds us to balance growth opportunities with risk management. Tech's a powerhouse, but overpaying can hurt. Speaking of tech, the Nasdaq's strength today ties into a broader narrative. Reports suggest tech stocks are poised for another 6-month advance, with investors showing unusual bearish positioning near highs, a contrarian bullish signal. AI adoption continues to fuel optimism for 2026, with names like Nvidia still dominating conversations despite China-related uncertainties. For us, this reinforces tech as a core holding, though we'll watch short-term volatility around policy shifts. Let's pivot to earnings, as this week brings some key reports to watch. Today, Toll Brothers missed earnings estimates despite topping revenue, with their stock dipping on softer demand and high rates, something to note for housing exposure. Tomorrow, Oracle and AutoZone are in focus, with Oracle's cloud and AI bets under scrutiny amid rising debt concerns. Later in the week, expect Adobe and Costco to report, with Adobe's digital media growth and Costco's consumer trends likely to shape sentiment. These results give us critical insights into sector health for our long-term plays. Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com. Checking in on the most active stocks, Warner Bros. Discovery saw heavy trading with a nearly 4% gain, fueled by hostile takeover buzz from Paramount. Skydance challenging Netflix's bid. Opendoor Technologies also popped over 5% with high volume, though some analysts warn of a potential slide to $5. These volatile moves are worth monitoring for short-term opportunities, but our long-term lens prioritizes stability over speculation. Over the past week, some large-cap gainers have stood out. Rocket Lab USA rocketed up 23%, showcasing space tech's allure, while Carvana accelerated 17.5% on continued retail momentum. Astera Labs also impressed with a 16.9% gain, highlighting AI hardware demand. These short-term sprints can signal emerging trends for us to research deeper for long-term portfolios. Conversely, weekly losers included Snowflake, down over 14% on growth concerns, and Symbotic, shedding 12% amid automation sector doubts. Netflix dropped 9%, pressured by acquisition costs and competition. These declines remind us to reassess holdings periodically, ensuring our long-term bets aren't derailed by temporary setbacks. Lastly, let's touch on sector performance over the past week. Healthcare led with a 4.5% gain, showing defensive strength, while technology rose 3.46%, buoyed by AI optimism. Industrials also gained over 2%, reflecting cyclical recovery hopes. These trends can guide our sector allocations as we build resilient portfolios. On the downside, energy slipped 1.16% despite some oil price stability, and basic materials fell 1.1% on commodity weakness. Consumer cyclical and utilities also lagged, down around 0.9% and 0.8% respectively. For long-term investors, these dips might offer entry points if fundamentals align. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.